Welcome back to BitcoinDorks. Today, we're diving into the recent arrest of Bitcoin Jesus and the concerns it's raised about potential crackdowns on crypto by the US government. Let's delve into the details. For those unfamiliar, Bitcoin Jesus is a nickname given to Roger Ver, a prominent figure in the cryptocurrency space and early adopter of Bitcoin. Ver has been a vocal advocate for Bitcoin and cryptocurrency adoption, earning him the moniker Bitcoin Jesus among enthusiasts. Recent events have cast a shadow over Ver's reputation, as he was arrested on charges related to money laundering and conspiracy to commit wire fraud. The allegations against Ver have sent shockwaves through the crypto community, sparking concerns about potential implications for the broader industry. The arrest of Bitcoin Jesus has sent seismic shockwaves reverberating throughout the cryptocurrency markets, igniting a cascade of uncertainty and anxiety that has rippled across the global investor community like a tidal wave. Roger Ver, with his influential presence and impassioned advocacy for Bitcoin adoption, has long been a central figure in the crypto sphere, earning him widespread recognition and the moniker Bitcoin Jesus among enthusiasts. The allegations levied against Ver have struck at the very heart of the cryptocurrency community, shattering the illusion of invincibility that often surrounds prominent figures in the space. The news of his arrest has sent shockwaves of disbelief and apprehension rippling through the industry. As stakeholders grapple with the sobering realization that even the most prominent and influential individuals are not immune to legal scrutiny and potential repercussions. Indeed, the ramifications of Ver's arrest extend far beyond the confines of his personal circumstances, casting a long shadow of uncertainty over the entire cryptocurrency ecosystem. Investors, developers, and enthusiasts alike are left to ponder the implications of this seismic event, grappling with profound questions about the integrity of the industry, the accountability of its key stakeholders, and the long-term implications for the future of cryptocurrencies as a whole. In the wake of Ver's arrest, the once unshakable confidence and optimism that characterized the cryptocurrency markets have given way to a palpable sense of unease and trepidation. Uncertainty looms large on the horizon, casting a shadow over the future trajectory of Bitcoin and other digital assets. As stakeholders navigate these uncharted waters, they are forced to confront the harsh realities of a rapidly evolving regulatory landscape and the inherent risks and uncertainties that accompany the pursuit of financial innovation. In the immediate aftermath of Ver's arrest, the cryptocurrency markets experienced heightened volatility, with Bitcoin and other major cryptocurrencies witnessing sharp price fluctuations. The news has fueled speculation and uncertainty, prompting investors to reassess their positions and brace for potential regulatory repercussions. One of the primary concerns stemming from Ver's arrest is the potential for increased regulatory scrutiny and government intervention in the cryptocurrency space. The US government's actions against a prominent figure like Ver signal a heightened focus on combating illicit activities and ensuring compliance within the industry. The timing of Ver's arrest, amidst growing regulatory discussions and legislative proposals related to cryptocurrencies, has amplified concerns about the future regulatory landscape. Investors fear that heightened regulatory scrutiny could dampen market sentiment, impede industry growth, and hinder mainstream adoption of cryptocurrencies. In the United States, regulatory oversight of cryptocurrencies spans multiple agencies, each with its own jurisdiction and approach to enforcement. The Securities and Exchange Commission, SEC, oversees securities offerings and exchanges, while the Commodity Futures Trading Commission, CFTC, regulates derivatives and commodities trading. The regulatory landscape for cryptocurrencies is further complicated by the lack of uniformity and consistency across jurisdictions. While some countries have embraced cryptocurrencies and blockchain innovation, others have adopted a more cautious or hostile stance. This patchwork of regulations creates challenges for businesses operating in multiple jurisdictions and can lead to regulatory arbitrage and jurisdictional conflicts. The rapid pace of technological innovation within the cryptocurrency space often outpaces regulatory responses, creating gaps in oversight and enforcement. Regulators face the challenge of keeping pace with emerging technologies and adapting regulatory frameworks to address new risks and challenges effectively. Amidst the uncertainty that has rippled through the cryptocurrency industry in the wake of Bitcoin Jesus' arrest, investors find themselves grappling with the complexities of navigating an increasingly intricate regulatory landscape. While regulatory clarity is undeniably pivotal for fostering the long-term success and widespread adoption of cryptocurrencies, the evolving nature of regulatory frameworks demands a multifaceted approach to risk management and investment strategy. In this climate of uncertainty, investors are compelled to remain vigilant and proactive in staying abreast of regulatory developments. This necessitates ongoing engagement with regulatory authorities, monitoring legislative proposals, and assessing the implications of regulatory actions on the cryptocurrency market. By cultivating a deep understanding of regulatory dynamics, investors can position themselves to anticipate changes, adapt their strategies accordingly, and mitigate regulatory risks effectively. Diversification emerges as a cornerstone of prudent risk management in the face of regulatory uncertainty. By spreading their investments across a diverse array of asset classes, geographic regions, and investment vehicles, investors can attenuate the impact of regulatory shocks on their portfolios. Diversification not only serves to mitigate idiosyncratic risks within the cryptocurrency sector but also provides a hedge against broader market volatility and geopolitical uncertainties. Furthermore, maintaining a disciplined and discerning approach to investment decision-making is paramount in navigating the regulatory landscape. Investors are advised to conduct thorough due diligence, assess the risk-reward profiles of potential investments, and adhere to strict risk management protocols. While the regulatory environment may remain fraught with uncertainty and ambiguity, proactive risk management and informed decision-making can empower investors to navigate the complexities of the cryptocurrency market with confidence and resilience. By remaining vigilant, diversifying their portfolios, and exercising prudence in their investment decisions, investors can position themselves to weather regulatory headwinds and seize opportunities for long-term value creation in the evolving landscape of digital assets. That's all for today's video.